All right, guys, welcome back. Let's get right into the stock market technical analysis. We're going to use the charts to be our guide. I'm going to go through what's working, what's not working. We're looking for profitable trade ideas. We'll cover the Intel stock chart analysis, and then we'll wrap up. So if you're finding value in the content, drop me a thumbs up. Let's get going. Triple Q's, guys, tech sector. If I flip over to the heat map, you can see basically it's pretty much a large cap tech rally day today. Pretty much all green, and then there is some red pretty much across the board in the other market. So it definitely looks like at least today there's some rotation, but I think it's a little bit more than today, especially in healthcare. So we'll point that out here in a second. We've got, we're on the daily chart here on Triple Qs. We're above the 200-day moving average, which is sitting right now about 292.50. So we're above that. And, it's bullish in general. I mean, the other thing is we have this downtrend line, a bear market downtrend line that we've been in. And you can see we're above both those potential trend lines and the 200-day moving average. So in general, where we sit right now is a bullish position. However, one thing that leaves me guessing, or at least questioning the fact that we're above here, is the Fed and the large cap tech earnings are next week. So I'm not looking to take this breakout due to the fact that those earnings and that big market moving Fed report is coming out next week. So we'll see, because this could be a pretty strong bull trap. All right. If the Fed comes out pretty aggressive and the earnings come out soft, you're going to see us back below the 200 and back below these trend lines and usher in some pretty strong selling. I'm not saying that's going to happen. I don't necessarily see that in the charts as of right now. But it's just, we'll let those things clear out before we look at a position. We need to manage our risk. Looking at the hourly chart here, we're barely hanging on to negative divergence, just barely. All right. So we'll see if that can hold it, or if not. If it doesn't hold, then that's kind of giving us a little bit of a tell. But here it is, just making an equal high in the momentum indicators while a much higher high in price. So we do have a divergent high, although it's just barely hanging on to it. So we'll see. Maybe there's a dump into the close. One thing to look at on the 15-minute charts, we've got this potential bearish rising wedge. There's no sell signal or breakdown, but maybe we dump into the close and head back down below the 200 and back down to this trend line here. This is kind of the upward trend line. All right. And that could be the potential for a move down. Or if they're not going to do it today, maybe Monday or Tuesday before the Fed comes out. So anything's possible. We'll keep an eye on it. I did stop out of that Q short. It was a small short for me. And again, most positions I'm going to be taking, if any new positions, are going to be relatively small, all right, ahead of next week. But small position, we did stop out on it, and it just wasn't working. So had to get out of that. Again, got to manage our risk. All right, so the tech shorts are not working as of right now. Let's look at what is working. So healthcare. I've noticed that healthcare, XLV, continues to kind of drift lower to selling off, basically. Look at the daily here. You can see we're just drifting lower. Not a huge drawdown, but definitely moving down. And then when I kind of rifle through some of these, ABBV, you can see this was, just clear drop off, just profit taking, just selling down. UNH, this is the big one in healthcare, selling down here. And then the one that I pointed out to the private member group yesterday was MRK, Merck. And this one had a sell signal, really a nice sell signal yesterday. So they got that in the private member group yesterday. But here's the thing. You've got an uptrend line here on the daily chart. You've got negative divergence, all right, which really started to build right through here, basically. This was your divergence where it started to build, okay? And then you've got a break of this trend line right there, a back test of the trend line right there on January 6th, or Friday the 6th, I guess. Yeah, January. And then the very next day, big rejection candle. Okay, so for me, that's the sell signal. All right, that big rejection candle. You could either take a sell signal here. It wasn't that impulsive, though, although it did break trend. But that breakdown after the back And that big rejection candle is the sell signal. And sure enough, drifting lower. Now we had support right about 108.75. Okay, you can see that support there. And yesterday broke that support, another sell signal. So today more selling. So this is working. Profit target on this one from me is about 95.32 on the daily. You can see that's former resistance. That should be support. And you have the 200-day that's kind of moving up as well. So somewhere right in there. 95, 96, somewhere right in there looks like the profit target, and that one is working. From where we're at right now, that is a drop of about 9.5% or so. So yeah, when I rifle through a lot of these growth stocks, I'm seeing breakouts today, and the only thing that it just gives me pause is that we've got those tech earnings and we've got the Fed next week. So they are breakouts. Here's Snow. On the daily chart, clear downtrend line, bullish divergence on the daily. I mean, in general, it's a very bullish setup. Everything that we need for that bullish setup. And we have a breakout, and today looks like the breakout. It's breaking pretty strong impulsive buying above the 200-day moving average. Okay, so growth stocks, you know, I'm seeing breakouts across a lot of them. There's Snow, that's a breakout. Net, you've got a breakout. Here, you know, last couple days breakout there. You know, here's this MDT one we traded. Look, it's recovered that level and started to move higher. So, you know, it's a breakout as well from this bear or bullish falling wedge pattern, signaling a move up to 88, 89. Maybe we get there before the Fed. Okay, maybe over the next couple days, the growth rally, they're just going to rip it into the Fed. For the next couple days, maybe they've got a green light to just buy growth stocks. That's completely possible. I would say if you're going to take the breakout, it would make sense to either tighten stops, keep them tight, especially ahead of the Fed, and then maybe lighten up before those earnings reports and the Fed as well. So something to take note of. Here's CrowdStrike again. Bullish falling wedge, broke out, just kind of drifting sideways, so not really taking off, but you know, the next buy signal would come on a break above this resistance line, which is sitting at about 107.42. All right, let's look at Intel. Intel earnings came out. All right, so on Intel, I go to the weekly chart first because we've got some weekly patterns to take note of. There it is on Intel. Okay, so you have a downtrend line, you're in a bear market, okay? But down here, we've got decent support, which is right around 28.60, 28.50. You can see rolling back on the weekly, I've got lots of reactions on that, pretty much on that level. And as I zoom in, we're just chopping through it a little bit. We've got bullish divergence on the weekly. Well, it's not quite bullish divergence, but it's close enough. We pretty much made an equal low and higher momentum. So I would say it's bullish divergence. And we have a minor downtrend line to watch. So if we take this downtrend line out, I think if we start recovering that 28.50, nice bullish recovery, we could move up to some key levels of resistance overhead. So, and I see first you've got the 200-day moving average, you know, so probably hit that, get a reaction there. We haven't touched that since back in March of 2022. So you probably hit that, get a reaction. Other levels of resistance, we've got a level at 38.19, and then the downtrend line, which is the bear market that this thing's been in, is all the way up here, about 40 bucks, depending on when you actually hit it. So that would be the final stop, would be a tag of that, and yeah, there is the possibility there. So we'll keep an eye on this one. I don't have a buy signal yet, but definitely it's a bullish setup for sure. All right, CAT. So CAT on the daily chart, this is your uptrend line right here. We broke and had a sell signal right here. They've bounced it back for a back test. As of right now, they've recovered that trend line. So maybe we have a false breakdown on our hands. The only thing that I'm giving this one a little room because one, we still have negative divergence on the daily. So even though we covered the trend line, we still have that negative divergence. We have earnings coming up also. Earnings are coming up on this one next week, okay? So with the negative divergence, with the breakdown, I'm going to give this one some room. I suspect that they will probably have another breakdown after earnings. That's what these divergences are telling me. So You know, this week, the last, couple of days have been just kind of this grinding ramp up into the earnings. But again, next week is a major week for not only the broad markets, but obviously this one as well. And if I narrow it down to the hourly chart, you can see that we're basically just barely hanging on by the skin of our teeth to that negative divergence. We have kind of equal highs in momentum, but higher highs in price. So this would really need to start to turn down soon. You can see the last few hours, there's just nothing there. It's just drifting. There's no real impulsive buying. So this is short covering. There's not really any buying here. Not institutional buying, that's for sure. So I suspect we turn down very soon, keep the divergences intact, and then we'll look to next week for that potential breakdown, probably on the earnings. DHI, no change. Looks very similar to CAT, just this breakdown and then this grind for all week. So no change there. JPM, same on that one. Basically, you've got the breakdown and just this grind. So no change there. Today, you can see the trading range today is just, we're basically going nowhere from the open to the close. And WMG, very similar. Breakdown, sell signal, and then just this grind for the last 2 weeks, really. And going nowhere. So I'm looking for more downside. Again, each one of these that have breakdown and they're just grinding underneath the trend line all have negative divergence on the daily chart, okay? So it tells me that we're going to break down. Likely not going to happen till next week. Okay, I'm going to wrap up with this one. If you guys are finding value in the content, check out my technical analysis course, link in the description below, and then equally the private member group, link in the description below on that if you're interested. Okay, EMR. EMR, on the daily chart, you've got this downtrend line. This is the bear market in EMR. This is an industrial stock. Plenty of reactions to justify this trend line. You can see we broke above it here and just traded sideways, but this breakout came with negative divergence, so it had a high probability of being a bull trap and a false breakout, and sure enough, boom, there it was, false breakout. So now we're back below the trend line, and to me it looks like we're bear flagging. So you can see here we're kind of flagging out. There's the flagpole. Here's the last couple days, week or so of kind of grinding higher, running into that trend line. Haven't quite got there yet, so maybe a little more upside, maybe not. And then looking for an equally impulsive breakdown down out of the flag, setting us up for a move if we start to impulsively break back down to 78. Yeah, it's about 78 or so, somewhere right in there. Decent support down there. So that's kind of what I got on that one. In case that starts to break down, you can keep an eye on that. Okay, that's all I have for today, guys. So I'm going to go ahead and wrap up, get this one out, and best of luck. I'll catch you on the next one.